What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
You heard it from Logan. We are rolling. Welcome back to The Last Trade, episode 7. Happy 4th of July week, gentlemen.
Happy 4th of July week.
It's a weird week with having it on the weekend, and then but it's on Tuesday. It's like there was no like a shelling point on when it was celebrated.
I don't know if it's a good thing or a bad thing, how having 4th of July on a Tuesday sort of extends the weekend to a 6-day weekend.
Kind of nice. I threw a party. It was fun.
I'm tired.
Marty's referring to, if you like, the sauce that he's been drinking for 6 days straight. And so he's trying to figure out if that's an actual problem or not.
No, so as you can tell, I recorded from down here last week, so I've been down the shore. I got down last Wednesday night, so last week when we recorded was the first day I've been here. And we're in a multi-generation home right now. My wife's parents, her sister, my brother-in-law, their kids. And we have all of our kids in one room. And since everybody's on vacation at the same time, we just haven't slept in like 7 days. So that's what I was referencing, not the sauce. Okay, Michael?
Hey, I'll throw myself under the bus. It's episode 7, and the lighting still hasn't been figured out. The microphone needs to be done, so we got some work to do on my end.
Yeah. Well, if you freaks weren't aware, we are joined by Alex Leishman.
Hey. Great to be
Founder
here.
of River, my favorite Bitcoin exchange out there. It's great to have you here, particularly on this week, because we've talked about this on TFTC multiple times in the past. And I think since it's 4th of July week here in the United States, tying Bitcoin and what it represents to the founding fathers of this country and what they fought for. How in line is the Bitcoin protocol with the ideals that the founding fathers tried to set forth in this country? Yeah,
we've chatted before, and I think what attracted me to Bitcoin was how deeply American it is. The fact that it's money that nobody can tell you what to do with. You can do whatever you want. It's fully self-sovereign. And I think that core is what deeply attracted me to work on this years ago. And, I consider myself and my family are very American at our core. It's like two peas in a pod, in my opinion.
Embodies everything. Free speech, property rights, freedom of association, sound money, which many people forget. That's like the crazy thing about the time we live in. Again, fish swimming in water is the most famous analogy that people use when explaining this. And even though we discussed it last week, like when you're pitching Bitcoin, you probably should have asked somebody like, what is money? You don't even know what money is. But we do live in this day and age where people really don't understand what money is, nor realize that the founding fathers had language about sound money in the documents that they created and signed.
Yeah, absolutely. And the last since the 70s, the American economy has done pretty well, and I think it's distracted people from the fact that this sort of encroaching monstrosity has taken more and more control, and Bitcoin showed up almost. I mean, it's almost almost too coincidental, that it showed up at the time it did. There's something about that it almost seems like a prophecy was fulfilled. There's something sort of like, it feels deeper to it. But I think it showed up at the perfect time, and I don't know, it might be what saves our republic.
Yeah. We discussed this last week too, but I do think, again, people have been thrust into the framework. It is worth reiterating. I don't think you can reiterate this too much, but people have been thrust into the argument framework of red versus blue, left versus right, and both sides are feeling the pain, and they are led to believe that it's the other side causing that pain and leading to the troubles that they experience in their day-to-day lives, while never addressing what is actually causing the pain, which is the fact that we messed up the money, and that has led to a ripple effect of compounding bad decisions that has got us to a point where the quality of life, despite all the technological advances that we've made over the last many decades, is depreciating in many ways. If you look at obesity, the overall state of health, life expectancy in the U.S. is crashing, drug overdoses, deaths of despair. There's, no matter what the government wants to, what picture they want to paint with the economic data that they put out, make it look rosy. I think there's a deep, unspoken understanding that something has gone terribly awry. It's not red side or blue side. It's the money.
Yeah, there's a beauty in independence and sovereignty that I think Bitcoin embodies. That people come to America for independence, and we found Bitcoin through the sovereignty of, it's the from the native Texan, like the come and take it. You have this asset that cannot be seized, cannot be censored, and at the same time gives you the independence to live your life, because that's the universal truth, right? Everybody just wants to be left alone and just do the things that they want to do. And the reality is, if the money is corrupted, you have that infringed on. And to Alex's point, there's something very interesting about, when free will is taken, how something ends up stepping in general over the course of generations. And you have this '08 crisis that had been built for probably over 100 years feeding into that. And that '08 Bitcoin comes out of it, and we've seen the past 13 years just this kind of growth in the market and mind share. And so we're at a very amazing time. I think everybody here, while the world's a little bleak, everybody here and folks that listen to the pod are extremely excited about the world where Bitcoin is part of it and helps humanity flourish moving forward.
Jesse, you're on mute, sir.
It snuck on again. I was reflecting on the 4th about how it's kind of surprising to me that there isn't more explicit language about sound money. I guess there's allusions to it, but it's not in the Bill of Rights, for example, in our founding documents. And I think it would have been if fiat money had been a part of the world back then, but it wasn't. Like the specter that they were concerned about, that Jefferson and Adams were concerned about, was nationalized banking. And we were on a gold standard. It wasn't conceivable, really, that we would be using monopoly money as currency and allowing the issuance to be controlled by the state. And it's kind of a shame that there wasn't an opportunity to put that in the founding documents at the time. But here comes the free market so many years later, creating that solution and imposing through capitalistic incentives and free market realities that here's a better currency to store your value and propagate it through time, and you can choose to adopt it or not. And that's the individual choice that everybody is facing. And that, through that sly roundabout way, reimposes the mandate of having fiscal responsibility and not being able to print money eventually. That's where we're headed. And I was thinking about how do we get out of the quagmire that we've normalized in the US, where we haven't balanced the budget in 22 years. We're on course for a $2.2 trillion deficit, and that's excluding interest expense that's creeping in here on $32 trillion of national debt at now 5% interest. And there's no political will to restore fiscal responsibility and balance budgets into the future. And so long as you can print dollars or issue debt, and control the printer that makes it possible to satisfy those obligations in time, so long as you have that ability, you won't. There's no political will to ever restore fiscal responsibility and balance the budget. But when there's sound money, when there's money you can't print, you are forced eventually to balance a budget because you can't print any more of it in order to spend beyond your means. And so I think, to Alex's point, that Bitcoin might be coming along at just the right time to save the republic, because it will eventually impose fiscal responsibility in an era where we've forgotten the importance of it.
Yeah, and that's another interesting point too. Again, like fish in water. Like people often forget. I think in recent years, people began to remember that this is a republic of autonomous states in a union that can make their own decisions. And as it pertains to Bitcoin, I think that's one of the most exciting trends and themes that have begun to pick up over the last 3 years specifically, is states asserting their autonomy and coming out and defending Bitcoin, or just signaling like, hey, we're open for business. Anybody wants to work with Bitcoin. And obviously they did it with COVID lockdowns and mandates and some other things as well. And that's something that's really important to highlight as well. States beginning to remember that we live in a republic and really reminding people that, hey, we can make our own decisions. Federal government, you've gone a bit crazy. We're going to protect our citizens within our borders with laws that we deem to be reliable and sensible. And Bitcoin as a tool for these autonomous states fighting back against what we believe is a bloated and increasingly Orwellian federal government, like Bitcoin gives them a superpower. It's an incredible tool to have in your belt as an autonomous state looking to sort of tell the federal government, hey, back off a little bit.
Yeah, you've talked about the permanent fund, and that what you just said made me think, is it, we talk a lot about nation state adoption. Do we see states start holding Bitcoin on their balance sheet ahead of nation states from that perspective on when it comes to federal taxes and being able to subsidize what's needed? Because that's always a thought, right? Is that there's a check and balance because individual states need the government subsidies, but in a world where they allocate to BTC based on, whether it's Wyoming and their energy extraction or other states, is that something do you think we see, or are we still too far out for something like that?
I don't know. Texas got their own gold vault, their own gold treasury. It wouldn't be surprising to see them jump into it first. They have the infrastructure set up, I believe, from like a legal perspective to do that. But no, yeah, I mean, the permanent fund makes a lot of sense to me. I don't know how it would work exactly, but I've always had this idea using the Alaska Oil Permanent Fund as an example, where they're able to pay Alaskan citizens dividends every year from the profits they make from the oil industry via this permanent fund. And it's always, I don't know how it would work exactly from like a funding perspective, but I do think there's an opportunity for a state government or a local municipality to issue a bond to raise cash to buy ASICs and then partner with a private miner to build out infrastructure, plug the ASICs in, maintain the operation, pay back the bondholders plus the interest. And then once those bonds are paid off, just roll those revenues into a permanent fund that builds up over time. Who's going to be the first to do it? I don't know. I think Wyoming, Texas would make a lot of sense, but
I think we know who will be the last two states. New York and California will both fight.
Hey, Alex is in New York now. Let's take it easy.
That was my subtle dig, because we're gonna do it here in Texas, and then we can have Alex come. I'm sure Parker would love to roll out the red carpet, get a River HQ down in Austin, and I think that the world will be ready to heal.
Yeah, I like being surrounded by people I need to convince. So.
Yeah,
it's actually sorry. I was gonna say, it's fun having you, Alex, in New York, because there's very few of our friends that are still there. So we get to see your tweets in real time about some of the craziness that happens on a daily occurrence that we don't get to insight anymore because generally everybody else is oblivious to it.
Yeah, I'm like, surfacing it all and bringing it to and I'm sacrificing, to bring you guys like a
Good
taste of what
content.
it's like on the inside.
The latest
Behind
was the
those
whole
walls.
situation. The latest was the whole situation in the Northeast with the smoke or whatever was happening. I was actually up near Canada and upstate New York, and I was like having my wife and son inside. I was like, I just don't know what's happening, but it doesn't make sense. Everybody else stayed outside. And I was like, am I crazy? Are they crazy? And then I was scrolling and saw your tweet about people running, and like it seems a little strange. It's like, okay, we're all right. It's gonna be all right.
Yeah, yeah. But hey, there's a good BitDevs community here, though.
It really is. This is one thing I miss about New York, the bit devs. Started going in 2015, and I think I missed like 4 or 5 over the many years that I was there. Shout out to Jay and Max at New York Bit Devs for putting on a great show. But Alex, really excited to have you on the show this week, especially considering everything that's been going on in the space with Prime Trust and the fallout from that debacle and subsequent transition to Fortress Trust, which was founded by Scott Purcell, who founded Prime Trust, which seems to have been embroiled with some fraud. And the way you built River has been intentionally done in a way to eliminate single points of failure or third-party dependencies like Prime Trust. So I think let's just assume that anybody listening to this podcast is ignorant to what you've built at River, what River is. Explain what River is and why you guys have built your company and your technical architecture and infrastructure the way you did, using Bitcoin's native properties.
Yeah, I deeply believe in this Bitcoin mantra of not your keys, not your coins, and I also think that applies to companies, and especially if you're selling Bitcoin or doing Bitcoin custody for people. And so at River, what we do is we offer Bitcoin brokerage, custody, wallet, and hosted mining services for both consumers, businesses in the United States, and then we also have an international payments infrastructure business. So and that's mostly focused on the Lightning Network, and we make it really easy for exchanges, apps, wallets globally to plug into the Lightning Network. And we have some pretty cool customers. The government of El Salvador is one of our customers for that product. It powers the Chivo wallet. And then we also have an international, we also serve higher end international customers for our brokerage services. So like high net worth individuals and businesses who are looking to buy Bitcoin for their treasury. And the way we built the company was sort of a slow, we kind of do the hard work up front to save headaches later. So we started the company by building our own custody system and building our own full stack. And the software was part of that, but actually a lot of the work was regulatory. We had, in order to be a company that touches people's money and facilitates the movement of that money, we have to be registered in or we have to be licensed in a lot of different states as a money transmitter. And that's an expensive and cumbersome process. It's a lot of work, but it's the only way for us to operate and have control of our systems and our keys and our infrastructure. The alternative would have been to outsource all of that to something like there weren't many places you could do that, and the most popular one was Prime Trust, where basically they're the financial institution, they have all the licenses, and you're building like a wrapper on top of their systems, but you can't touch the money. And if you can't touch the money, it means you can't know that the money's there, and you can't have any you don't get as much insight into how the custody is being handled, and how the operations are. So so that's how we approach our business, is kind of doing it the hard way, the Bitcoin way, proof of work. And it's turned out to be the right decision, because these third parties that a lot of people are outsourcing to turned out to be, frankly, clown shows. It was pretty obvious, in my opinion. But everyone learned the hard way, I guess.
Why do you say you think it was obvious?
Well, look, I don't want to. I don't want to I don't want to sling too much, um, you know, shit. I guess. But look, I've interfaced with, a lot of these firms who claim to be qualified custodians, and like, I want to be careful. Okay, like, okay, if your qualified custodian is based in like Las Vegas, and doesn't have anyone who's ever built key management systems or like worked on like crypto custody systems, like you kind of have to wonder, like, is that a place that I really want to be storing assets, right? That's all I'll say. uh, and um, and yeah, I think like people really over indexed on just like they basically outsourced their due diligence to regulators who also don't know what the hell is going on, right? And really, and really, the questions should have been like, well, how are they doing custody, right? Does anyone on this team know how to build high quality custody systems? Because if you don't have that, it doesn't matter how many licenses you have or how many regulatory checkboxes you check. And so there was a very sort of massive gap in people's due diligence, in my opinion.
Yeah, just to add a few things there. One, really commend you, Alex, for what you built. It's increasingly, as Marty said, I think it's the most frictionless entry point for somebody trying to get access to Bitcoin or larger, like you mentioned, institutions or nation states looking to leverage some of your products. Have been building alongside in the Bitcoin only ecosystem, at Unchained with River, now OnRamp. And have always respected, because of what Alex just referenced, is it takes a lot of work and foresight to understand that you want to own the infrastructure from custody, MTLs, compliance, and everything in between. And I actually fully also understand where somebody would use an intermediary, because you can help jumpstart that liquidity process of being able to offer certain services. Where I think, and I'd be curious, like Alex and everybody else's thoughts, is you want to, if that's your route, that's okay. But the problem is to not be complacent on that, because there's a lot of counterparty risk for you as an individual business owner, but then also for your clients, the individuals that are relying on you as a trusted party to get access to these financial products. And so you're basically kind of kneecapping your own potential business by leveraging these intermediaries, whether it's the custody of US dollars, custody of the BTC, and everything in between. Because again, when we talk about these intermediaries, Nevada state charter, it's questionable what the rest of the state charters look at from a trust entity. So South Dakota, Wyoming, it's my understanding that Nevada is like its own little kind of bubble on like the requirements. And that's always been known. The Nevada state charter was questionable to be offering these services in the way that they leverage them for all 50 states, or however many they let the MTLs. But then the other part is really the status of hiding or leveraging behind the qualified custodian status. Because as we've discussed here, and it's been shown point blank, it's like qualified custodian, segregated, all the buzzwords you can throw. From a legal perspective, yes, you might need it from an RIA or to offer services in the United States, and that's perfectly fine. But from a pure game theoretical understanding Bitcoin and the architecture and just what can happen to the asset if it's not custodied. So you can have the qualified custodian and still have completely unqualified custody if it's not secured properly. And that's effectively what just happened the past, 6 to 12 months, but the past month, what we saw with Prime Trust. And so again, just to tie it all back in, it's very important from the business owner to understand the layers of counterparty risk as you build a business, because you have to think about the different ways a flow of funds can potentially be lost or just not structured in the right way. But then also from a client perspective, understanding where you're depositing dollars, where the BTC sits, where you're taking possession, and everything in between, because those are all points. We're dealing with a different world here versus like traditional securities. And so there's a bunch of points where you can ultimately get rugged, and we just continue to see this. And this is the course of Bitcoin. Will be over the course of the past 10 years, probably the next 10 years, until the market gets educated. And we've talked at length previously with the ETF. And so there's just different financial products that will be structured, and they ultimately won't adhere to Bitcoin's native properties. And over time, those generally have shown to not end up faring well for the company and the end user, which is the saddest, because that person stored their hard-earned capital in that company and in the unit, and they thought they were okay, and it ended up being a trending, or it went to zero.
Yeah, exactly. And if you look at, and the thing is, if you really need a qualified custodian, you typically know that, right? Like, you're an RIA, you're starting an ETF, you are a big pension fund, you're a public company, and there's already products for those people. Like, go to Coinbase Custody, go to NYDIG, right? Those are New York trust companies. If you're looking for, like, if you really want to make sure all the legal stuff is going to be exactly like you expect, the New York Trust Company is the gold standard, but you have to pay for that, right? You're going to have to pay AUM fees for that qualified custody, because those qualified custodians in New York have to lock up that capital with regulators. So the cost structures are built for like financial products that have AUM revenue models, like funds, like investment management, and the like. So this sort of like outsourced, like, compliant custodian as a service, it tends to basically attract, like, I mean, if you look at Prime Trust customer roster, like, it was Celsius, Binance US, Abra, which they're saying was insolvent on top of Prime Trust insolvency. I mean, it's not exactly like, a great roster of companies using these kinds of services. So, and there's a reason for that. So, yeah, that's my.
I think one also thing to point out is it is not required for an entity to hold Bitcoin in a qualified custodian. It is required for registered investment advisors to hold securities on behalf of clients in a qualified custodian. RAs do it because it's a form of CYA, but it is nowhere written that you need to hold a commodity with a qualified custodian. They decide to do that because they are not, again, information asymmetry. They just want to check the box and be fine with it, but it is not required. And it's being rumored or discussed that there's this discussion on the federal and state levels on what qualified custodians will be required to hold, and they're trying to encroach on other assets, alternative assets, commodities, real estate, and also what states are recognized, i.e. federal versus like honoring the South Dakota Charter as it is today. But that is all speculative, and it's still years more than likely, because that would require changes across the United States. So it's just, there's a lot of discussion out that happens about this. And again, I didn't know about any of this stuff, right? It's like, when you get in this world, you have to understand it. And when you go and look and educate, the reality is very different than what people will propagate out into the market. And it's important to know, because at the margins, if you choose a qualified custodian that ends up in Nevada, you may lose all your Bitcoin.
Yeah, and an interesting data point here is the only, as far as I know, in recent history, the only American custodian that went bust due to something other than financial leverage was Prime Trust, which was a qualified custodian.
Wow.
I mean, I can't think of any other examples. Like, all the other ones that went bust, like Celsius, BlockFi, it was all yield and leverage. It was all financialization risk. The one custodian that screwed up key management was a qualified custodian. And I think there's a correlation there. People running qualified custodians tend to be traditional financial people who know absolutely nothing about key management.
Yeah, absolutely. And so there's this world where you can combine the two. You need the Bitcoin custody skill set to marry with the qualified custodian procedures and policies and practices. And through that fusion, you can create something better that you might not get by just handing over your keys to a quote unquote qualified custodian.
Yep.
Yeah, and I mean, so like, what is a qualified custodian? Why do they exist? Ideally, by the letter of the law, to protect consumers by ensuring that their assets are custodied by somebody qualified to actually control and secure those assets. But again, like Michael mentioned, Bitcoin's completely different. Like, the way to consumer protection on a grand scale in the era of Bitcoin is to have like a distribution of private keys amongst many businesses. Like that would be the worst case scenario, is if this qualified custodian encroachment into alternative assets turns out to be true, and you force a bunch of Bitcoin into very few players' hands. That's overall bad for the vast majority of consumers, because that's concentrated third-party risk in the hands of a select few, which is not what you want. You want a million flowers to bloom, distribute the private keys amongst many different businesses, many different individuals. And yes, some may fail, but that failure will be isolated to a relatively small group of people compared to the potential failure of a massive qualified custodian.
Yeah, exactly. And you know, also sort of like part of the purpose of the qualified custodian thing was, you know, you have these financial institutions, they're like moving all sorts of assets around, doing like trading over here, doing all sorts of stuff over here. Like you want to make sure that if you say you have a client's assets, they're like, there's no funny business happening with them. They're all right there. If you're just running a simple Bitcoin brokerage, you know, where you're holding, someone buys Bitcoin, you put it in your cold storage. When they withdraw it, it leaves your cold storage. It's not like there's all this other stuff going on, right? It's not like customers' assets might be over here, might be over here. It's a very like simple business, and we're already legally required to not use our clients' assets for anything else. We make those representations to regulators, and our auditors check that. So it's, you know, like it's not really designed for this. It was designed for a very different sort of financial institution.
Right. And because fundamentally there's never been an asset like this where you can point to the ledger real time and say, here's the proof, it's sitting right here. There's nowhere else it could possibly be right now. It's not like these books are out of date. It is there. This is, you know, my real-time Bitcoin audit in action, you know, and of course the auditors have their other policies that they're checking boxes on, but that gets you a great deal of the way to the assurances that you're seeking with any kind of audit trail and custody in general. You want to know that the assets are there, that control is maintained by the entity that is supposed to be controlling it and nobody else, and that's what Bitcoin provides.
Exactly.
Yeah, it's a brave new world. And that's, I mean, as a Bitcoiner, as an investor in the space, if somebody wants to see freedom win out in the long run, that's like the biggest threat right now is like the regulators in the United States just really dropping the ball by infringing on the market, sort of figuring things out and putting some overburdensome regulations on smaller companies, and then creating risk for individual consumers at the end of the day by applying this anachronistic view of securities custody onto Bitcoin.
Yep.
Yeah, I think that's the thing that we like. It's been talked about. And I was actually initially concerned, you know, what you just referenced, Marty, of like decentralization, qualified custodian, federal. But the reality is like Bitcoin's such a tiny asset compared to other things that would fall under this. Like gold's a good example of this. So you require all these different entities to figure out if they need to move the gold or go get this charter. Like that would cause an uproar across other industries, let alone Bitcoin. Like I don't see this happening. You know, in that scheme of having to like move assets or not recognizing state charters, where the dynamic would change for custodians to move forward with how they custody all these assets. Because again, think about trillions in assets being held in these different custody arrangements. I think before we jumped on, we talked, or maybe it was on the thing, we talked about the Texas bullion depository. Like I think this would effectively have them have to move the assets out of that or get some kind of state charter to custody those assets, because they're holding it, I think, still for the largest endowment in the country, which is UTIMCO, the University of Texas A&M endowment. And I think it's over $1 billion held at the Texas Bullion Depository. I don't believe they're a qualified custodian. And because they're not, those assets would potentially have to move. And I actually probably should check that.
Yeah, and I think there's like, we talked about this, I think, on the last episode, and I think my thoughts have crystallized a little bit more on what I see as a likely outcome over the next 10 years is a lot of Wall Street firms are going to get exposed to Bitcoin and launch Bitcoin products like the BlackRock product. Ones that are very successful could accumulate large amounts of Bitcoin. Meanwhile, I think the price of Bitcoin runs such that these funds become very large. And, a bedrock normal practice for Wall Street is to rehypothecate assets in funds, to lend them out to get additional yield. And, thinking about it more, I think that I'm going to go out on a limb here and say that some very large Wall Street firms that have been around for a century are going to die in the next 10 years because they rehypothecate Bitcoin and the tide goes out. And the hole on their balance sheet is larger than their enterprise value. And I think that's the better scenario, because the world, Wall Street, everyone touching the hot stove and burning themselves is better than the alternative, which would be the over-regulation and of how Bitcoin custody is done, forcing all of the Bitcoin out there into a small number of custodian honeypots that can then be more easily confiscated or controlled or have stipulations applied to them about OFAC compliance or KYC AML or ESG compliance or whatever the flavor of the month is at that point. So I think we're going to see Bitcoin custody be a extremely big topic in the world of finance over the coming decade, and people don't know it yet. And I think it's going to be the reason that some venerable old Wall Street established names die in this decade.
Yeah, so Texas Bullion Depository, not qualified custodian. And Alex, I don't know if we've chatted or we haven't chatted about this, but part of what Jesse said was Q3, Q4 of last year, before really the end fallout of FTX, we started having conversations with folks that were sitting close or at Citadel, BlackRock, and hearing about all these plans, EDX, not really the ETF, but recognizing at the time and I think this was even in writing, that the EDX, Schwab, Citadel, and Fidelity were going to use Paxos as their backend. I think it just came out today or yesterday now. They're potentially using Anchorage custody. But just seeing what we witnessed with BlockFi right before that, and the status of the market was like, oh my God, we're going to see orders of magnitude like what we just saw, what we just witnessed 3 to 5 years from now at that scale with Wall Street. It's like there has to be people that step in. And at the time, looking at the market, and I'd be curious, your thoughts, building in the space, you kind of thought a lot of the market players have been built. You looked at Grayscale, you looked at BlockFi, and while we knew that they were kind of on shaky grounds, maybe they get themselves out of it, but it was the whole landscape got, the table got knocked upside down. It was the opportunity is still there. And now you have the benefit of hindsight of how not to do things, the risk not to take. So to Jesse's point, it's this is a big reason why where on-ramp exists, is really thinking through how do enterprises, institutions actually get to a way where, or how do we build the right structure so we don't see what happened just recently with FTX, BlockFi, and the happen 5 years from now, but orders of magnitude larger.
Yeah, it's honestly it's been really sad to see how many people lose money and get hurt by this. But selfishly, it's been great for our business. And I've said this on other podcasts, but during the bull market, I never understood how the lending worked, if I'm being honest. I never understood it. I never really understood where the yield was coming from and how they did all this stuff. And there was a point in time where I was almost kind of wondering if I'm just dumb. Am I just retarded that I don't get this? And BlockFi was soaring and all these guys were soaring. And I was like, I don't know how this is working. This just doesn't make me feel comfortable. We're just not going to do it, but we're also going to be missing out on a lot of growth and revenue. And it turns out those instincts were just right. And so, since then our growth has been great because, now everyone's learned, well, yield isn't actually a great thing for Bitcoin. So now I'm going to go to the company that doesn't offer any yield because that's much safer. But and so like that's a lesson that I think that the industry learned. What I don't know is, Wall Street was built on all of this stuff. Like all these finance people, all these firms, they all made all their money, not all of it, but a lot of it, just doing all these funny games. And when they get into Bitcoin, like Jesse said, like, is this actually going to help Bitcoin, or is this Bitcoin just going to kill all these guys? Because they can't do the same game. And so like, what's the point of them getting into it? Right.
Yeah.
So, yeah.
Yeah, I think there's so much hubris right now because that's Wall Street. They think they know money. They've got the playbook from 150 years of doing this. And now the big boys are here to show us how it's done. But the thing is that Bitcoin is uncompromising. And Bitcoin humbles everyone because it is uncompromising. And you have to play Bitcoin's game on its terms. You can't dictate the terms of the game to Bitcoin. And so there's this juggernaut of hubris coming up against this completely inflexible Bitcoin. And we're going to see fireworks from some, disastrous outcome of Wall Street playing the games that it is accustomed to getting away with in the fiat world.
Yeah, sorry.
You got.
Well, and I was just going to say, like, I think my realization has been, like, Bitcoin is like kind of the great de-financialization. Our company name officially legally is River Financial. We just did a brand refresh. We now just say River because what I wanted to sort of internalize in the company is we're not a finance company. The innovation here is software, it's user experience, it's brand, it's service. We're not going to be building new, finance things. We're not going to be offering new sorts of ways to, like do leverage or lend or anything like this, because that stuff will just kill you. Everything we're going to be building at River is like software based. It's how do we help people secure, move, and buy Bitcoin better, people and institutions, and that's our focus. There's no there's nothing on our roadmap that leads to I just can't sleep at night offering any financial products that involve risk beyond software risk. And so that's why we're just River now, because I'm like you don't want to be doing finance with Bitcoin.
It's really funny to hear you say that, Alex, because me and Marty talk a lot about just the status of the market. And it's like, if you look hard and long, it's like the only way you get to what you just said is looking long enough at this problem that you're like, oh, like it's like the killer app is just buying and holding, at least for another 10 to 100x. And so I've been coming to this realization too. And I look at the status of just venture in itself. It's like, how much a lot of these firms that are Bitcoin only don't actually monetize because there's only so many people willing to spend the asset. If you think about Lightning and liquidity, the orders of magnitude is on chain versus through it. And so to your point, I think there will be a financialization of it just by definition of it being money, in the same way that there will be very incredible businesses built in top line, but the core from an order of operations and where the money will accrue and the value-added services right now is literally to get exposure and to hold it safely and securely. And then everything else is downstream of that. And there'll be test and innovation just similar to early internet days. But right now, in my mind, it's still similar to Webvan, where you're going to see the inkling if you squint, but we're still probably years out from all the different crazy stuff because the primitives haven't been built that mimic what the software layer will allow. And the example I always think of is we tried a lot of stuff in the early 90s and early 2000s, but it really was the mobile phone that allowed for the real applications to be delivered because you had GPS, you had geolocation, you had the phone that sat in your thing, and then you got the Ubers and Airbnbs of the world. And so to your point, I think, the killer app is not the lend against it or get yield or these other, like, even merchant services, like, it makes sense that they need to be worked on, but we're still so far from people using Bitcoin as money that it's just something I've been thinking about. So to hear you say it out loud, it really is kind of like crystallized in my mind the past few months.
Well,
And when you're, go ahead, Marty.
well, I was gonna like, in harkening back to your comment, Alex, about sitting there watching a lot of these DeFi yield products blow or like have temporary great success. Like I had that same feeling too. Like, am I wrong? Like, are we, like, I had that same intuition. Like, I don't think this is right, but they're making so much money that maybe I am wrong. Maybe I have to check my priors. Like, remember 3 Hours Capital, Suzu and Kyle Davies were vaunted as these wonderkins. FTX,
Smartest
SBF
guys.
was a wonderkin. Like, yeah, they were all the smartest guys in the room. They could influence people on Twitter. They can go on podcasts and sound extremely smart, but they were doing some of the dumbest stuff they could ever do with Bitcoin, which was borrow it from a company like BlockFi or Celsius and then go leverage trade it with shitcoins. And that's what's going to be interesting, tying this back to like Wall Street getting in, and something we probably have to mentally prepare for is a temporary period of time where it seems like they're having massive success doing their financial games with Bitcoin. They're marketing like massive returns and showing all these profits. But like Jesse said, the tide will eventually recede and that will get all laid to bear. And like Michael said, it's going to be pretty epic. But that's like psychologically the point I'm trying to make here is, having been in the space for 10 years, I've had these self-doubt questioning moments many times throughout the many bull and bear cycles that I've been a part of over the last decade. And it's something, as I get older, as I get more experienced, I'm beginning to internalize much better. It's like, hey, it's all noise. Come back to the fundamentals. We have sound money. You cannot print more of this. So taking obscene risk with it just does not make any sense, especially if you're a business acting on behalf of clients.
Absolutely. And for me, like the last year really hammered home this idea that I'd always kind of intuitively known, which is like sounding smart and being smart are two very different things. And, if you add unnecessary risk and complexity to things and you create this, you create this sort of like complex world of complexity and little things that you need to know and understand, and you create all these words like rehypothecation and swaps and perpetuals, and and you create that, you can sound very smart, right? And somebody like who's like, what, I just think all that stuff introduces unnecessary risk. They're not going to bother understanding all of that complexity you just created. So they're not going to sound as learned and intelligent as the person who is into it, right? They just intuitively know to stay away from it. The smarter person actually intuitively knows to stay away from the complexity. But because of that, they sound dumber, right? Because there's fewer words they know. There's fewer concepts for them to explain to you. And you're constantly on the defensive. Like, you don't want to spend all your time. Now you have to go research what a perp swap is so that you can explain to somebody why it's a bad idea, right? It's an endless sort of like struggle to constantly try and debunk new crap that gets invented for you to lose your Bitcoin. So I think that's what ends up getting people, is like that sort of dynamic.
Yeah, we talked about this a bit with Parker Lewis, and Michael and Parker had they riffed on how Bitcoin is a common sense test. And, it boils down to, like, if you just have internalized the common sense mantra at some point, the money doesn't grow on trees, there's no such thing as a free lunch, you're going to avoid the fancy talk that is designed to be the siren call that lures you into risk. And if you just stay the course and know that you've got sound money, you got the best savings technology ever that appreciates in value over time because of its increasing scarcity, and that's good enough for you, you're going to come out on top.
What's interesting, though, is there's almost like, if you were like that from a previous generation, you avoid Bitcoin.
Yeah.
And that's the irony of that, right? Because like you hear about a blockchain and you learned your lessons the hard way in like the pre-Bitcoin world, and you hear these guys going on about all this stuff. You're like, I learned to stay away from the complicated stuff. So there's
Yeah.
kind of
People
ironic.
yeah, absolutely. You throw out the baby with the bathwater because you're like, there's no way that any of this blockchain mumbo jumbo is worth my time. When it turns out that we've reinvented sound money.
It's a fascinating paradox.
99% right.
Yeah.
Like 99% of the blockchain mumbo jumbo isn't worth your time, but 1% is. And that's a really important 1% to not miss.
Well, that reminds me of the Bitcoin's is a get rich slow scheme disguised as a get rich quick scheme. So if people look at it, they think of it as a Ponzi. Marty, your comment really made a lot of sense about the pattern recognition, and I think this happened in 2017 with the altcoins and everybody thinking they're crazy about not getting the ICOs. And it's like there's something to the downstream effect of who gets in, the early adopter, and similar with this ETF and all this financialization with the different fund structures and who custodies. You're going to start seeing the downstream ruggings happen at a certain point, because some ETF is going to do, maybe it isn't BlackRock, but it's another one that does decide to lend out. The volatility happens. They're not used to seeing it go from 300 to 150 over whatever the numbers are. And it's just going to we're just going to see it happen again. It was like, I could have never figured this out. I don't understand. And then 5 years from there, we'll see the nation state do the same thing. It's just all the way ruggings until the end.
Ruggings until people relearn the lessons of a free market economy with sound money. There are no bailouts in Bitcoin, and we have to relearn that hard lesson. The only way that hard lessons are ever learned, which is through disaster.
Yeah, and that's actually, since you brought up the BlackRock ETF, I was observing a thread that a bunch of the ETF FinTwit people were engaged in earlier today, and it's really funny to see how they view Bitcoin, and particularly BlackRock's entrance into the space. I'm going to put a tweet in here. Logan, pull it up. We talked about it on a rabbit hole recap too, but I think it's important to discuss it here on the last trade as well, because especially for our audience, because I do think Wall Street views the BlackRock ETF in a particular way that is going to get them burnt or severely limits their understanding of what Bitcoin can do. And so this is Eric Balkunas, who I believe is Bloomberg's ETF expert. The big irony in all of this is most crypto people see the ETF as boomer mainstream TradFi, when in fact the ETF is the real disruptor and mediator. This was the point we made after the dumb Matt Damon commercial. And he references an article with the title Spot Bitcoin ETF could make this the last crypto Super Bowl commercial. And essentially his argument is since people will be able to access Bitcoin via the ETF and only pay 10 bips in fees, that is the disintermediator in the space so far as cheaper access to Bitcoin, failing to acknowledge that Bitcoin will just sit in a Coinbase wallet that individuals won't have access to, and therefore won't be able to reap the benefits of the digital bearer assets and the many things that you can do with that.
So I need artwork in this cave I have at the house or whatever, and I think that needs to be framed. Is there a more perfect Wall Street just version of understanding what's happening here? It's I think where I saw that was your comment about 12 words, or you responded about 12 words being a lot easier than understanding this. And it's just all personal responsibility, absolving of all risk. It's just here, ETF 10 bips, handle this. It's incredible, because the 10 bips actually isn't 10 bips. It's a zero. Ultimately, what's on the table is if you lose all your funds because they decided to do something.
Yeah, the point Michael's making here is, for anyone out there who is less versed in what exactly BlackRock has created here, is they're going to try to have very low fees, and that sticker price will look great in terms of here's your AUM fees or your trading fees too. But they could get their additional yield by rehypothecating that Bitcoin. That's the standard practice. And then that's the scenario where you could end up with the zero. So buyer beware. When Wall Street is saying we've got this figured out and it's going to be really, really, really cheap, so cheap you can't believe it, it's for a reason, and there's hidden risk.
Is there any indication that BlackRock is, in the current filing, is allowed to do any rehypothecation?
Yeah.
You're on mute, Marty.
Marty, you're on mute.
That's what I was just going to say. I don't think there is. I don't think
Right.
I talked with Townsend Lansing from CoinShares, who's created a lot of these exchange traded products in Europe around Bitcoin and other cryptocurrencies. I mean, he helped spun out the GLD and Palladium and Platinum Grantor Trust, which is the model, obviously, that BlackRock's using for the Bitcoin ETF. And he's seemingly like, no, there's no way that they can rehypothecate in that model.
I think that the question is, like, the grantor trust has a direct exposure, and then what they're supposed to do. I think where it gets mucky is between the authorized participants, the redemption, creation, and what all the things that happen in between on having the actual Bitcoin versus what the claims on it from like shareholders are an issue.
Yeah, I think people should more worry about like Coinbase. Like if they ever get in a sticky situation, because they're the ones custodying it.
Yeah, in my view, I spent a weekend really diving deep into the S1, and there's a lot of little mucky details that about like standard practices that Wall Street's bringing that add a little bits of risk here and there, and you could have a disaster at any one of these points of small risk. Coinbase being one of the additional single points of failure effectively that is in place in this model. There's nothing in the S1 that prohibits them from rehypothecating, and I've heard both sides from folks about whether or not they would dare to rehypothecate to lend out the Bitcoin in the fund. But there's nothing explicitly that says they can't. And that is a standard practice with ETFs. So they could, tiny risk, but it's there among many other little mucky points that are, Wall Street trying to force their structure of how they do things to make Bitcoin fit in it.
Interesting. And even if they're not doing it now, there's nothing, things change down the road. Yeah.
Right. And for example, for that, like, the in-kind redemptions are allowed for the APs, the authorized participants. That means broker-dealer firms. And it specifically says that those broker-dealer firms have to enter into a separate contract with BlackRock and basically be in the good graces of BlackRock. So that's the limited list of who can do in-kind redemptions. And at any point in time, BlackRock could revoke those permissions for some or all of them, depending on it. And there's a little angle, a little point of risk where it could be, it starts to become a bit of a honeypot where if the government wanted to 6102, let's say it ends up being 1 million Bitcoin in this vastly successful BlackRock fund, very, very, very doable.
That's actually my biggest concern. And like, let's put the 6102 off the table, just the honeypot. If it gets 1 million Bitcoin, it really means Coinbase. And by the way, BlackRock probably has 4 to 5 million Bitcoin because of what they already hold. Because like if they get 1 million Bitcoin, that means the price is whatever. And at the same time, that means Coinbase is holding more GBTC if they're still custodying with Coinbase. And you get to 3 to 4 million Bitcoin sitting on Coinbase. I'm curious, Alex, have you thought about that? Is that like concerning you? Because that's like that was the first thing I thought about.
I mean, it's a real concern. I mean, the good news is, BlackRock could diversify their custody if they wanted to. But it's weird because like with custody, you almost want to go with the biggest one because they have the most to lose and probably have the most resources to secure it. But it's a constant concern. But I don't think it's really avoidable because wealth distribution in terms of just like, where it will land, like the institutional stuff will just be vastly, outweigh any sort of individual holders who are self-custodying. And so you're just going to end up with a dynamic like this, whether it's Coinbase or somebody else. So I don't really know if it's avoidable, just given how just human civilization works, frankly. And so because of that, better hope Coinbase doesn't mess up.
Yeah.
But I think this is like a civilizational sort of like reality. I don't know that it's actually ever avoidable. Like the wealthiest civilizations or like the wealthiest countries will have the highest institutional trust, right? And will like trend towards like wanting to outsource this core competency. Like BlackRock knows that Coinbase can custody their Bitcoin a lot more than BlackRock can. Like the alternative is BlackRock custodying it themselves. And like, well, what's safer, Coinbase doing it or BlackRock doing it? I mean, probably Coinbase doing it, almost certainly, right? And so, I don't know. These are sort of just like foundational issues, and I don't know that there's a good answer.
I think the counter that is like that. This is the first asset that can have multiple people participate in the custody model.
True.
Right? Like you can't split the Bitcoin or the gold or the silver or the dollars, but the asset can have multiple jurisdictions, multiple entities. And I think that's where we're staking our bet, is like, that's how this all ends up playing out, is the keys end up further out versus like Coinbase holding it all.
That's a great point.
And that is the one of the pieces of learning that is outside of the paradigm of Wall Street, of corporate America, frankly. Like Alex nailed it. You tend to trust the expert firm, and because there's one firm to hold accountable and put all your eggs in one basket. That's how the world has worked. But this crazy asset has this property that can mitigate your risk by distributing across multiple entities.
There's a game theoretical aspect too about just like being able to move the assets if you're coerced, like in the sense, and I always thought this was interesting, like Unchained Casa holding one key in a world where worst case scenario happens, server sees, government, whatever it is, they can't move the funds. And that always kind of keeps a check and balance on what can happen. And I think in a world that we are concerned about a 6102, the best position for a large entity holding the asset is actually not able to give up the Bitcoin or be coerced because they don't have unilateral control. I think we're a long way from that, but I think that's ultimately, if Bitcoin becomes money, it will face that term in whether it's the US or another jurisdiction. That will be a problem, where it could just be a government that wants the Bitcoin for themselves and not even outlawing it.
Yeah. And that's the other thing too. Like when it comes to like 6102, like Bitcoin is a push system. It's not a pull system. So like if the government wanted to confiscate Bitcoin, whether it be from individuals, Coinbases, or a multi-sig, multi-institution setup, like somebody has to sign the transactions at the end of the day. When they did the 6102 gold confiscation, they literally showed up and just took the gold. Especially if you have like a multi-institution, multi-sig, or even just a geographically dispersed multi-sig as an individual company. It's much harder to do that like in-person coercion if you have the right processes and policies in place. And let's hope to God it never gets to that point, or government never gets so despotic and overrun with power that they try to do this. But that's the beauty of Bitcoin's native multi-sig properties, is it is sort of a hedge to that. Like, hey, you can't move that. Imagine if the government went and tried to get like 3 institutions to collaborate to move user funds, and instead of moving them, they came out publicly and be like, hey, the government's trying to take your Bitcoin. We don't want to let it happen. And you get like a social movement behind that.
It's true. But I think at the end of the day, like, if the U.S. government is willing to go after your money, I mean, like, you kind of have 2 options, right? Keep your keys in jurisdictions like yourself, right? Like, keep your keys in jurisdictions that the U.S. government has no influence over, which are typically very low trust jurisdictions, right? Maybe there's like a few, maybe like Dubai or something, but or keep your keys in high trust jurisdictions, but the U.S., just like they did to Switzerland at some point, gets the power to just be like, no, you're going to do this because you will. right? Like I don't know. I don't know how that stuff plays out.
Yeah, I think
Yeah.
Marty, to your point, like the counter is just as easy it is to take the person's gold, to take the person or the entity that can sign, you can force them to sign. So I think to Alex's point, it's like this hybrid of jurisdictions along with the U.S. And it's not necessarily that it's more of to make it's the asymmetry of violence, basically. It's like the reason about like, firearms in the US. It's like, it's just the thought that you have to go door to door that makes it untenable or like very hard. That's like the game. That's what we're all trying to play. It's not like we're going to, completely solve it, because the reality is you can put pressure on anybody or one entity. It's just about leveraging the tools as they are.
Yeah. Yeah. Again, it's a brave new world. Exploring the unknown here. Or sort of known. We know what the government is willing to do.
What are you guys' bets? Does the BlackRock ETF even get approved this year? Let's say this year. Does it get approved this year?
I think right after Labor Day.
Labor Day?
Right after Labor Day, yeah.
Yeah, I'm kind of 50-50 on it, actually, though I'm sort of bracing for it does happen, which is good and bad at the same time.
I guess the better question is what gets approved first, ARK or BlackRock, because that's been in the headlines this week, is that ARK Invest, headed by Cathie Woods, is technically front in line and has refiled to be very similar to BlackRock.
Yeah, maybe ARK gets approved first, and then BlackRock a few weeks later, and BlackRock day 2 has surpassed ARK in AUM.
I mean, obviously a better distribution. I don't know. I'm going to be contrarian here. I don't think it gets approved. Everybody, again, pattern recognition in Bitcoin. Everybody thought the Winklevi's ETF was going to get approved in 2020.
What do you think the motive is for that, Marty? Like, do you think the SEC is trying to stop it for a particular reason? Or do you think that they have like a legitimate justification for wanting a better version of an ETF?
I mean, the way Townsend from CoinShares explained it to me, and he used to be like a securities lawyer here in the US, was that they're really worried about price manipulation, and not particularly at Coinbase, but like other offshore exchanges manipulating the price, which I think we do have some examples of that in recent history. Like FTX, you could argue that they actually manipulated the price lower than otherwise would have gone, because they were just dumping people's Bitcoins on the market. And I don't think the way Townsend, I'm not a securities lawyer. I don't know, frankly, don't care whether it does or doesn't. Like the signal in and of itself is big enough, in my opinion. And the signal is that BlackRock's customers have been demanding Bitcoin so much that they were forced to bend the knee and file for this ETF. I don't think they came to the decision to file a Bitcoin ETF by themselves. I think their hands were forced. My clients were saying, give this to us, we're going to take our business somewhere else. But going back to the price manipulation, like even if Coinbase does really good custody, they run a good shop that doesn't manipulate price, which looking like the history like Bcash and Litecoin and stuff like that, like who knows if you can actually say that with any degree of certainty. Even if they have that surveillance sharing agreement with NASDAQ, the way Townsend framed it to me, I believe, if I was understanding him correctly, was they don't have any assurances with offshore shops manipulating the price. And even if you have your buttons buttoned up between Coinbase and NASDAQ, it doesn't really matter to them.
Marty, what happened? You're Marty Jones. You're thinking in the lens of the world being logical. Like Townsend came at it from a logical, fair playing game. Like this is BlackRock. This is the U.S. government. Like they're gonna just slap. They're gonna slap everybody around. They're gonna slap Cathie Wood and ARK and say, "Hey, yeah, you were first. Whatever, you play by the rules. This is our ETF." Like it's a humiliation ritual. Like they're gonna get it. It's gonna go to BlackRock. What he referenced, it's like it doesn't even actually make sense because it's inconsistent. Like they did the futures ETF already, and it's a global like traded asset. Like it's already traded. Like the price manipulation has always been just their version of hiding behind getting the ETF actually launched. It wasn't actually real. Like we know that it's a free traded asset. They're going to do like the USD to BTC pair with like Coinbase, they're going to have it isolated so they can show it, and they're going to make up all these reasons when in reality they could have done it 3 years ago. Like, I get what Townsend was coming from, and in a free, like fair, whatever world that all makes sense, but that's not what we're living in. And so, they're just going to jam it through.
I was trying to play the contrarian on the panel, but I agree. I mean, BlackRock's going to get the red carpet rolled out. We'll probably
The better question I'm curious is what is going on? Like, what is going on with them launching it? Larry Fink coming out about it playing in gold. That's like what I'm curious about.
Well, that's a good segue into the newsletter you wrote over the weekend, Jesse. Like, we had pretty big spasms in bond markets today. Like, maybe it's a signal that they're like, hey, things are not all well in the markets that we've been playing in.
Yeah, it's funny timing that today the UK gilt market had a steep bond sell-off, and this last weekend, and I put together a piece, the bondholders burning platform, and tried to lay out in simple terms why the math is really not on the side of bondholders over the coming decades. And it's a pretty simple argument. Ultimately, it's that the amount of debt in the system at the sovereign level, at every level, necessitates that we're going to print a lot of money in order to inflate away the debt. Because if you 2x the money supply, you let inflation run hot such that $1 today is worth half as much in the future. Suddenly your nominal national debt burden is 2 times easier to pay off, because GDP adjusts upwards and it becomes easier to service that debt. But the bondholders are left with the bill, and so it's a way to get out from under the debt burdens that the U.S. and every G7 nation has at this point. You have to print a bunch of money and then confiscate wealth from the bondholders in doing so. Like, that's the math. That's the path forward, is to cause the $32 trillion of U.S. national debt that is held by individuals and institutions, and whether or not you even know it, because people have in their pensions or in their 401ks, the standard 401k is the 60-40 portfolio. 40% of that is bonds. A lot of that is U.S. Treasuries. And the math says that has to be devalued. You have to earn a negative real return on that portion of your portfolio in order for the U.S. to get out from under its national debt burden without hard defaulting. So at this point, we've kind of crossed the Rubicon. We have to default in one way. There's soft default, print a bunch of money. There's hard default, just say you're not going to pay people back. And we have a printing press. So of course, we're going to soft default and print as much money as we need to nominally service our debts. That's the circumstances. That's what we're looking at. And that means that over the next decade or two, bonds will deliver negative real returns for their holders. And then, today we have a massive sell-off of UK sovereign debt, meaning that people who are holding these bonds are realizing, I don't want to be holding this because I'm going to end up getting a negative real return. So get this out of my portfolio. Let's sell it and reallocate to a different asset. Of course, my view is that people will learn over each successive Bitcoin halving, that Bitcoin fulfills the function that bonds are supposed to provide to your portfolio at this point in time going forward. That reliable return over time, in Bitcoin's case, delivered by increasing scarcity with the halvings, causing value appreciation over time, rather than the nominal promises of yield that bonds offer, but then can't deliver in real terms, given the amount of national debt that we face and every G7 country faces at this point.
The counter to that, just to play the devil's advocate, is like, hasn't it been the past 5-10 years, like bonds have had negative real returns? Like
Yeah.
the common thought is like, yeah. So what is that like? How, is it at the margins that we're going to get the like grandma and the family offices to start, or like how does that work? Because I think that's what everybody's been waiting for, right? The like
Yeah, it's already in process. Like the platform is burning a little bit right now, and it's up to bondholders to realize that the platform they've placed their value on is on fire, and it's made of wood. Since MicroStrategy has, Michael Saylor's been keeping track of this and proudly proclaiming how MicroStrategy adopting the Bitcoin standard has done very well for them in comparison to the risk-free asset of U.S. Treasuries. So since MicroStrategy adopted that in, that was 2020, bonds are down 19%. So if you were to store your value since 2020 in bonds, you lost 19% in your purchasing power, whereas Bitcoin is up like 160% or whatever. And more. I'm not actually sure. So there's it's already in process. And we talked with Matt Dines about 25% down since 2021. I'm not sure exactly which point in time or what type of bonds he was referring to, but this wealth destruction, this wealth confiscation is already happening. What's wild about it is that for this to work, policymakers have to convince the bond market that high inflation will not continue, because they need somebody holding the bonds to confiscate wealth from. So, you really can't trust what you're being told by the Fed when it comes to inflation, because they need somebody to get stuck with the bill.
You hear that, Alex? Your 30% personal account allocation to bonds is on fire. Is that what you're?
Well, no, I think this is actually, I mean, Jesse and Michael, obviously you guys are talking to a lot of people who are curious about Bitcoin, but Alex, I know that's a point that you make at River too, to actually speak with your customers, particularly new customers. Like, are you seeing any growing trends and common themes that is turning people on to Bitcoin?
Yeah. I mean, so we're seeing record transacting users month over month for a while now. I think it's really mixed. I think all these factors are basically pushing the crowds more quickly and quickly into Bitcoin, but the way that like everyone perceives it is maybe from a different perspective. Every individual in that crowd as to the why they're doing what they're doing. For some of it's inflation. For some of it, they've gone down the rabbit hole and they've like really sort of understood the theory. A lot of people, frankly, they're friends. Like, I actually think like the majority of people are convinced by a minority of people, right? Guys like you guys, you're spreading the message, you're getting the word out there. People listen to your show, and those people then tell their friends, and it gets people going further and further down the rabbit hole. So, I think, lastly, I think it's the decline of institutional trust in the United States. Before, if you trusted the U.S. government, you trusted the U.S. dollar. Fewer and fewer people trust the government, and I think that's also unlocked a lot of people's minds and given them permission to actually look at this thing.
Yeah, it's a very good point. It seems very obvious, but something I never connected. Like the collapse in confidence in the U.S. government, particularly, should lead to a collapse in confidence in the dollar.
Yeah, I mean, if it's because when I was an undergrad in college, I was really into this monetary stuff. I graduated undergrad in 2012, and I was talking to my parents, and I would talk to other people about central banking and why it's bad, and most people just kind of thought it was kooky, right? But now when you talk to people about it, you get it's different. Like, you're allowed to talk about that stuff now without looking like a nutty professor. like Ron Paul was right about a lot of things he said, but like the mainstream saw him as like sort of this kooky, quirky, like professor guy. And now, if you ask a lot of people now, like, do they have the opinions he had? They're kind of like, yeah, we shouldn't have been in Iraq, right? We should be watching out for central banking. Like these are mainstream conversations to have now, not just sort of fringe libertarian weirdos. So I think that's all a result of people realizing the U.S. government is an absolute mess. Our institutions have been co-opted by people who don't share our American values, and it's leading people down this path.
Yeah, I think an incredible anecdote I came across recently was that we had this debt ceiling fight a month ago. It was, both sides pretended to fight over whether or not we would allow more debt, and of course ended up rubber stamping it. And that was 1 month ago. We raised the debt ceiling from 31.4 trillion a month ago. And we have now added almost $1 trillion of national debt in 1 month. And that is the same amount, roughly, as all of the fighting about bank bailouts in 2008. That was the scale of what those bailouts were. And we've just added that to the national debt in 1 month, and nobody made a peep. That's how much things have progressed since 2008 in terms of the erosion of fiscal responsibility, and trust comes from that.
Yeah, Marty, your tweet from the weekend. So I just thought, I was talking to Jesse about it, I think today or yesterday, is like 150 billion, I think, has been funneled to Ukraine from the government the past 2 years. And there's like the 4.5 billion, I think, that was paying off some of their debt that's owned by BlackRock. Like it's literally insane if you just look at it. It's all out there.
Yeah.
This is brazen corruption. Oh, nice.
It really is brazen corruption. That's like,
but that's power, right? So that's true power, right? The people in charge have true power that they can just do this in front of you and nothing happens to them.
Hunter Biden can do cocaine on the White House balcony on the 4th of July without any fear of retribution because they have true power.
Yeah, I'm short. I'm long American values. I'm short United States federal government institutions.
Same.
Yeah.
And tying it back, I think that's one thing we have to recognize too, and we touched on it earlier, but like the beauty of when Satoshi launched Bitcoin, obviously in the wake of the great financial crisis, you had Ron Paul really drumming up some support, but not quite enough during that election. And then at the same time, you have like the bubbling and the emergence of the social media wave, which has played a big part in propagating Ron Paul's message and the message of Bitcoin on top of that. So you have like all these factors, Satoshi, the great financial crisis, Ron Paul like seeding some ideas, and the people in our generation, I was 17 at the time, and really connected with me. And then we have social media, we go on, we lean into those ideas, discover Bitcoin, like, hey, this is a perfect implementation of these ideas that they can't corrupt, and we don't have to ask for permission. And then we're able to go on social media, begin propagating the message. It really is like a crazy serendipitous coalition of events that happen.
When I was first raising investment money for River, people would ask me, who's your biggest competitor? And I would tongue in cheek, but also like kind of half meaning it, say the Federal Reserve. And as this goes on, like, it's almost like memeing this is getting us closer to the reality of it. I feel like this is going to be one of those like Trump moments where like it's a meme that he's going to be president. It's like this like kind of meme we joke about, like Bitcoin's going to like take out the Federal Reserve, and it's still kind of a meme. Like we still kind of are memeing it, but also like someday it happens and we're like, holy shit, I can't believe that just happened.
Yeah. Yeah, I do think it's incredible that for most people, they will experience Bitcoin as something that was just a joke that turned out to be real, like a joke that everybody decided was real, that it was always a joke and just became real. Like for most people, they will not put two and two together that Bitcoin was real the whole time and not a joke the whole time. But we're living in this weird breakdown of reality, where Elon is memeing all sorts of stuff, and the internet is crazy, and meme stocks take off, and we're going to end up with meme money, and most people will just be like, I guess this is what's happening. But if you actually look at the evidence and dig into it now, you can front run those people because you understand it's not a joke, it's real.
And I mean, well, that's the thing too. Memes aren't jokes. They're truths that are distilled into very like a JPEG, like a digestible form of information. Logan, pull up. Don't play the video, but just pull up the YouTube so anybody watching this, and link to this in the show notes after. I think honestly, this is one of the most important speeches ever given at a Bitcoin conference. It's Michael Goldstein's The Art of Bitcoin Rhetoric: How to Meme Bitcoin to the Moon. And it is so incredibly well done. It started a lot of controversy when it first got released in 2019. But if you dig into it, like the memes around Bitcoin, number go up. The three-word meme basically highlights that Bitcoin's extremely scarce. More people are going to want it, so numbers going to go up. Like fix the money, fix the world is another one. Stay humble, stack sats. Like these memes are riddled with truth at the end of the day. They have truth embedded in them, and that's how we get
common
the message
sense.
out there. Yes.
Yeah, they become the way that you can most effectively transmit common sense wisdom to the maximum number of people. Stay humble, stack sats is penny saved, penny earned for a new generation, a new digital landscape, and we're part of creating that new pantheon of common sense witticisms.
It's so much less absurd than this concept of a dollar is a dollar that the government owes you. Like,
yeah, the mental gymnastics of
what do you
of
mean you don't
MMT.
understand it? Like, well, you need to go get a degree to understand this. This is the way money should be. It's just like
What do you mean my money's not in the bank? Oh, you don't know. You don't know that we lend it out, great new units. We only actually we're required to have 0% of the money that we are taking in reserves at any given point in time. Yeah. Let's see, like, we've harped on this show, many other shows, but again, cannot be overstated. Like the simplicity of Bitcoin from a network perspective, from an asset perspective, is incredibly beautiful because we will be able to build a complex world just by anchoring into the simplicity of the network, like having that stability of its simplicity, its transparency, its tangibility in the sense that you can see what's going on at any given point in time. You can verify what's going on at any given point in time is extremely powerful. That simple anchoring function that Bitcoin will play in society.
Yeah, I mean, Alex touched on it earlier. Bitcoin is a great de-financialization. It's like the fact that your money just does what it's supposed to, then you don't have to do all the other things that everybody's been on this hamster wheel, and you get to do what God gave you, like as a individual on this earth, to like go and flourish and innovate. And we've been stuck in this kind of like perpetual just tinkering, and all the best people focused on these apps and all this weird crap when there's so many other things that we can be doing and basically innovating as a society. And so I think that there's like, I think personally, but I think probably everybody in this group is like part of the goal or attainment of what we're working towards is like that end version. David Bailey says it really well. It's like the party starts when the dollar ends. It's like when we're all like have that unit, that's when the fun actually begins. And until then, everybody's just trying to get memed and psyop to figure it out.
You mean you guys don't want a world where your grandma has to own dozens of different companies securitized, and also all of their debt securitized so that she can feed herself when she's older?
CDOs, derivatives.
Yeah, that's the way it should work. Grandma needs to grow her dough when it comes to the financialization of the world. Just suck it up. Talk to her financial advisor. Get a nice
Your
allocation
money to Larry
strategy.
Fink. Sit
Your
down,
money to-
at your place, and you'll be able to eat when you're old.
Then give some more of
Imagine
your money to
trying
the government, and then they'll give that money to Larry Fink too. It's great.
I was just thinking, like Jesse just pulled it, or this was just pulled up. Think about all the financial advisors and wealth managers that could build that cathedral physically if there was just Bitcoin. You don't need 1%, 2% paying somebody every year to look at your money.
Yeah,
crazy.
I saw this Logan, if you put it up, I saw this come up yesterday of like, it's a beautiful quote that it was not in Bitcoin world, but I came across it of modern man is in a terrible predicament. He is helplessly enamored with the beauty of what the old world built, yet despises the beliefs that inspired them to build it.
Yes.
And I think it's so close to what I would say is, the sound money and the deflationary engine of craftsmanship is what built so much of the stuff in the world that we, hold on a pedestal. And Bitcoin returns those mechanics to the world and is how we're going to build a better world going forward.
People know deep down inside what's real and what's true, and you have to be taught to not listen to that. And I think we're seeing a trend. More and more people are listening to what's there, but we have a long way to go.
Yes. And that's actually a good segue into the last question. I want to ask you, Alex, before we wrap up here. Somebody's building a company in the space and touching the Bitcoin technological stack at protocol level, at Lightning, in the mining industry. Like, what are you most excited to build on the horizon, or what's exciting you in the Bitcoin space right now that you can apply to River?
So the two things technologically that are most exciting me are Lightning. I really think sort of we're getting to an inflection point, and the tech is getting there where Lightning truly is going to unlock a whole nother order of magnitude of international value transfer, because we've removed the delays for payments and the US. It's a 10x US experience for transferring value with Bitcoin now. And we're working on a lot of stuff there. And the infrastructure has matured to the point where we're starting to be able to get real money, real flows happening with this. I'm also very excited about cryptographic advancements. There's a lot of investment left. I'm thinking about what we might be investing in at River, but deep crypto investments, and by crypto I mean cryptography. I think there's a big opportunity with Frost and creating Schnorr-specific multi-party computation, which I think can be a lot more elegant than some of the stuff we've seen with ECDSA because of how messy ECDSA is. And I think there's a world where I kind of see MPC as maybe sort of multisig 2.0. It's going to be a little bit more complex. There's still going to be reasons to use multisig, but this concept of like having a singular root wallet key split up into shares that can be refreshed, rotated, signers moved in and out, I think is really interesting. And I want to see Bitcoin specific versions of this for Schnorr, be mature implementations built out. And I have a lot of like interesting product ideas and thoughts and like what kind of things that can unlock. So those are two things I'm really excited about.
Hell yeah. Jesse and Michael, anything you want to add before we head into the weekend here?
As Alex was talking there, I was thinking about how it really is a testament to the choices you made early on and sticking with them, that you had the foresight to like own your infrastructure and not, get into any situations where you were trusting a custodian that wasn't quite up for, the job. And I think that what you're talking about right now and the excitement to build out the feature set is such a perfect microcosm of how Bitcoin wins. It's through through, the cumulative efforts of adding valuable features, and doing it in a, you're building a cathedral, and Bitcoin is about building a cathedral and doing it the right way. And yeah, I admire it.
Thank you. And I'm really excited about what you guys are doing.
Thank you. Us too.
Yeah. Removing central points of trust. The more we do that, the better.
Yeah. I think just to echo Jesse's sentiment, really appreciate you joining, Alex. Really admire what you guys have built. And I think the one thing we didn't focus on, but is a big part of what you guys do in every business that will truly be successful over the next decade, is on the education and providing, people are coming to financial, service. I know you're not calling River financial service business, but a partner, a trusted brand. They're looking for guidance in this new world. And so part of that is it's the responsibility of that individual and that firm to provide their clients with the right guidance, because that's going to translate to them telling their family and friends. And that's how these businesses are built, by propagating that. And so you guys have done a great job of that. And that's a big part of all this, because like we talked about earlier in the podcast, that if you can win early, but you can't win long if you don't actually send the right message on education and educating the end client. So that's a big part of you can have the right product, and you also need to have the right education and motion to go to market. And you guys have done both. So it's been cool to see.
Thank you. Yeah, we're investing heavily in that. We're trying to put out some really in-depth research reports. We just put out a few weeks ago on a 60-page research report on Bitcoin and international payments. So check that out if you want to go deep.
Yep, Marty has a pod on it. If you're not a reader, yeah. I thought there was some very interesting data points discussed on that pod. They're really interesting.
Yeah, with the research analyst at River, Sam Wooters, we dove into it on TFTC. So if you guys want to go over to that podcast and check it out, it's a great conversation. I mean, you've got some killers on your team, Sam being one of them.
He's awesome.
Yeah.
And my old classmate from Stanford, Julia, shout out Julia.
Yeah, Julia's a pillar of River. My right hand woman, COO. She has been instrumental in River's success.
Oh yeah.
So you have good friends, Jesse.
Julia's great talent.
All right, gentlemen. That was an incredible conversation. Alex, thank you again for joining us. We will have to link up in person since I'm on the East Coast right now at some point in the next few weeks. I'll make sure to make that happen.
We shall.
Everybody go enjoy your weekend. Things are heavy out there. People are losing faith in institutions, but we have Bitcoin. We have this giant thing that we can anchor into. We hope that conversations like this give you some more clarity around this incredible grounding force that we have in Bitcoin. So that is all for this week, episode 7. We'll see you guys next week for episode 8. Peace.